Earnings and guidance from Meta, Amazon, Microsoft, and Alphabet are now signaling as much as $320 billion in capital expenditures among them this year. That's up some 40% from last year's already sky-high numbers. But investor sentiment around this spending might be undergoing a shift. Christina Partsinevelos has the story for today's Tech Check. Hi, Christina.
Hi, Mike. Well, AI stocks have seen a significant pullback in early 2025 after last year's surge. The market data right now really tells a sobering story. We know, you mentioned it, the tech giants aren't holding back. Meta, Google, still pouring billions into AI infrastructure. We're talking massive investments in chips, servers, and networking. Alphabet alone is boosting its spending by $75 billion this year. That's 29% more than Wall Street expected. But here's the twist. Wall Street's reaction has changed dramatically. Take a look at this chart that we're going to show you. Last April, AI-focused names like, NVIDIA, Dell, Broadcom saw their stocks surge when big tech announced major AI investments and increases to CapEx. Vertiv, a digital infrastructure provider, jumped about 23% in a single day on April 23rd, 2024. But if you fast forward to now, those same basket of stocks, including Arista Networks, Modine, Marvell, are barely moving. Despite similar spending announcements from tech giants, we're seeing an average gain of literally just 1% last week. That's a fraction of last year's excitement. So what's behind this market shift? Analysts are pointing to three key reasons. First, there's growing concern about tariffs. Investors are looking for safer havens like software. Look, we'll show you on your screen right now, the increase in the IGV up 9% or so versus the SOX ETF over the last month. So you can see really just a difference in pace for those two. Second, the DeepSeek headline does have some questioning, or there's some questioning around the pace of AI development. And then perhaps most importantly, Bank of America is warning that all of this AI spend could start eating into profit, even for the mighty Magnificent Seven. So the big question now is whether this is just a temporary cool down in 2025 or a sign that Wall Street is starting to take a more realistic view of AI's near-term impact on corporate bottom lines. Show me the monetization, Mike. And listen.
Yeah, as someone who comes from the show me state, I can certainly appreciate that sentiment. Christina, thank you.